Okay, so oh dear, I lost my voice. I've been going through some physical ailments that have affected how my voice. So therefore, this might be difficult. But anyway, what I want to do is talk about some just little things that I'm starting to use to help make better decisions on where and what to buy and to a certain extent how to sell in terms of using price action. So this is the price action from today. Today was a half day, Black Friday, and I think we can do it from a bar by bar. Some of them I'm not very good at when it comes to things like limit orders. I haven't yet found the best way to trade with limit orders, but with stop orders, I'm getting a lot better. But a lot of it has to do with context and momentum. When you're trying to decide on what you think is probable and how to manage a trade, using the context and momentum is very useful. Context is the bars to the left and literally what the market is doing, particularly on the higher time frame. So if we look at what we've been doing over the last few, um, this is a weekly chart, clearly in a bull trend and a pretty tight, small pullback bull trend after this breakout over here. We have a wedge top, and after a wedge, you expect two legs down, at least to the moving average. So we've already achieved the two legs here, and this leg down is coming after quite a few bars from the last test. If I can remember correctly, it's over almost 30 bars, I think. Yeah, 27 bars. Um, so this is a lot of momentum, and it then suggests that this will be a minor reversal, and therefore expect at least an attempt to get back to the all-time highs from this push down. All right, so let's look at and so based on that, actually, we had the wedge. We've already achieved two legs down. The momentum down was pretty poor. We have two overlapping weeks, and the third week that's gone down has a tail below it, and it closed just above the 20 bar exponential moving average. So this isn't enough to make traders convinced that we are reversing. One thing is certain though, we are in a trading range as far as this is concerned. So we can say the range bottom is here and the top is here. So currently we are heading back to the top of the range, and we have one strong bull bar. Coming into the start of the week, if I project this from the prior day, so what I will do, the prior day was Wednesday, apply, is that correct? Let me just make sure this is right. Just before Thanksgiving, Wednesday was a trading day, therefore, yes. So this is where the price was before we traded today, at least on the weekly chart. We have very strong momentum, although this is a weekly bar and this is the last day of the week. Bulls will try to, of course, bulls are trying to break prior resistance. This is the next resistance here. And what I'm going to do is I'm going to mark it, at least from a weekly perspective. This is just a rough estimate as I'm not. And what I'll do is I'll put it on all charts, and I will, yeah, let's leave it as blue because we don't have blue on the other charts. All right, so on this week we have this as a magnet. This is the target because we get above this, we're taking out prior resistance. We've taken out this resistance, and when I say resistance, the high of the bar. Because think about it, the bar opened here, went all the way up and came down. Found sellers around this price being resistance. So currently we've gone above this, and therefore we are somewhat in a resistance zone, but we're finding still some momentum. So let's look at the daily chart. Coming into today, we just move that along. Oops. We have a 4-bar bull micro channel. Essentially, every single bar's high and low is above the prior bar's high and low. No bar has gone below the prior bar, and therefore it's a micro channel because we have no pullbacks. It started off with a weak buy signal, and I remember when we traded this day, at the time when I traded it, because this is such a weak buy signal, I remember saying in my Discord that this high will be a magnet for price. And lo and behold, we had a pullback to that price to test it, and we found buyers there. It was a breakout test and went for a second leg up. So technically, this is a wedge, but there's so much momentum on the upside. Chances are we're probably going to get another leg up. We have a gap up, and what's interesting is we actually have a gap that has not been filled. Oh, another thing was when we took this high, the next resistance was up here, and more importantly, up here. So if we mark that high, that day's high, as you can see, was tested here. We actually went slightly above it. So therefore, chances are there will be some sellers who would try to come here. But what's interesting is you can see the tail at the top is very small. So it suggests, in my opinion, that we still have traders who are holding long to go higher. So I remember onto this day, my initial thoughts were, if we opened where we opened, there is support at the moving average. Usually what happens whenever we break the moving average in a trading range, we tend to come back to the moving average to test it for a second leg up. But sometimes we go even higher, pull back to the moving average, and go for a second leg. We can use this as an example. Coming down slowly, break out, pull back. In this case, we actually pull back a lot more above the moving average before we go for a second leg. Again, over here, a breakout, a pullback. You can see we had a second leg down here, but this actually found buyers and it was higher low. So this is a lot of momentum. And then we tried it again. We even got a bigger higher low, formed a triangle here, breakout, pull back to the apex of the triangle, and went for a second leg. So you have 3 pushes, 1, 2, and 3, and you have a wedge top. So 2 legs down, pull back, another 2 legs down. All right, so coming into today, we have a gap up, and as you can see, small gap from the prior day's close, but still within the high and the boundaries of this bar. So because of this momentum, there is momentum with the bulls. However, this is a small bar compared to the prior bars, so chances are this bar would be small. Indeed, is what we have. However, I mean, it's a half day, but there is a chance we will get a small bar. All right, so we now look at, say, the 60-minute chart. Again, our target, this is what I marked on the daily chart, on the weekly charts. This is the goal. And as you can see, we never got there on the weekly chart. So this is still the goal, probably for next week. But anyway, so on the 60-minute chart, pretty tight bull channel. First test here. Usually when we get first breakout, but this was just the first one. Second, this is the proper breakout. And usually sometimes what happens is whenever you get this and you get a bear surprise like this, you sometimes get a bear bar like this. If you do get a bear bar like that, chances are you'd find sellers above. Instead, we got a doji. And what kind of doji was it? I think it's a bull doji. No, it's a bear doji because it's red. So bear doji, bulls kept buying, and you can see more aggressive buying sideways, testing this high, poked above it, but closed below it, right? And then we gapped up above it, and prior to today, we got a tiny bit of momentum and then sideways. This makes sense that we didn't go too far up, just purely based on the fact that we have a pullback over here. Whenever we break out, we've gone sideways. There's a lot more buying over here because we're close to the average price. But as the further away we go from where the move started, the further away we go from the moving average, the more the momentum is dropping. So chances are any big move up will be met with some resistance. Essentially, the point being that yeah, traders are not as convinced. We're also getting close to the top of the range here. This is the top of the range. We're also getting some sideways here, and there's some sideways here. This is resistance here. In fact, let's see what happened. Yeah, you can see every time we tested it, we're getting some pullbacks. All right. So what do you expect for today? Well, we're getting tails above the bars, but tails below too. So chances are this is a tight range. Chances are we have buyers below and sellers above. So we go up slowly, just like this. So it's what I expect for today. And that's literally what we had. I guess you could do the same for the 15-minute time frame. Nice breakout, a lot of strong buying way above the moving average, sideways to the moving average. So this sideways suggests that we'll get a second leg for this. So 2 legs down. So I expect this day to be a second leg. In fact, you probably expect a 2-legged leg 1 equals leg 2 measured move. Well, it didn't happen today. Probably if we had more time, that would probably be being some form of the target. All right, so let's look at the overnight session. On the 15-minute overnight, just clean that. That was a triangle I was looking at over here. On the 15-minute overnight, coming into today, we've been going sideways. Not a lot of convincing selling, just sideways. After going sideways the prior day, this doesn't really count. I think this is Thanksgiving. And then we now go into the overnight. We're getting some more momentum. So technically, if you compress this, we have a wedge, essentially the bear channel, something like that. And you can see we're losing momentum below this price. Nobody wants to sell below this price. Lots of tails below. So at some point, you're going to get a triangle and the bears will give up and we'll just start the trend again, which is literally what we have. Over here, we have a wedge top. 3 attempts to go higher. 1, 2, 3. So we've established a high, and this should go 2 legs down. However, whenever we get that and it fails, we get a measured move in the opposite direction. So something like you could say the size of the wedge, maybe all the way up here, somewhere up there. So for people who are trying to find targets, they can find an entry and try and target somewhere up here. You can see the market almost got there. You know, if that's how you're doing, but that's how I would do my measurement based on what I'm seeing over here. All right, so let's see. Now we have an idea of a plan. We have an idea of what the momentum is. We have strong momentum here, sideways, and we know that this needs a second leg. We have a little bit of a gap. What is it? No, this area here. Okay, we've closed we have body gaps, but the wicks, yeah, there's a gap. This wick did not overlap this wick. And if I zoom in just to make the point, you can almost see that. Anyway, it doesn't matter. Point is, it's almost non-existent. It's so tiny. So we have sideways here, and it's a triangle. Is it a triangle? Oh no, not exactly. I mean, we have higher lows, low highs, and then this is the target for the triangle breakout, right? But anyway, so we have a wedge top. We've broken above, so chances are we should go 2 legs down. But we are in a bull trend, so chances are we'll find support at one of the moving averages. So we get a wedge sell off here, but we are getting bad follow through. We have an II, so inside. So this is a triangle, and this should sometimes lead all the way down. We test the bottom of the wedge, which is over here. So we go 2 legs down, and look at what happens. We go back up, and we go sideways. So we're going to look at the 5-minute time frame to see what's happening here, because this in itself leads into a triangle, and you can actually see it. You know, you have the market creating lower highs and higher lows, right? Whenever you're getting this, I've noticed now that usually because you're getting 2 legs up, you get 2 legs down, test the bottom of the wedge, and the market now decides, do we go down or do we go up? i.e., the market is going into a triangle. That's usually what the decision is. Whenever we go into a triangle, the market is trying to decide which direction it needs to go. We break out and we pull back to the apex of the triangle and go for a second leg, which we have over here. We have another wedge. But look at what's happened here. This is another wedge top, should lead to a second leg down. So 1, 2, 3. So you're expecting 2 legs down. But look at what happened. We got a breakout. And again, you're expecting a measured move. The size of... Now this is where things get tricky for me. Do I take a measured move from here? Possibly here. It's close to the other target. So we have some new target. So seeing this move happen is not a surprise based on what we're actually seeing over here. All right, so let's go into the 5-minute and the chart that we're actually trading. All right, so we have ideas of targets, but we don't know, we're not, you know, if you're swing trading, you know that you would hold your swing to those targets. I didn't mark the price, but what I usually do is I just mark the high, and I will sometimes mark the low of the range. So this is the range, this is the low. So we know that the market has been operating in this range coming into today, right? This is the top of the range, this is the bottom of the range. And essentially what's been happening is the market is trying, you know, this is where we've kind of been operating. This is the last swing high, so we can also mark that as well. We have a gap to that level. And you can see we never ever close that gap. So this is more bullish than bearish. The fact that we did 2 legs down and never got these bears out. Essentially, whoever sold here and did not get out here will sell again, trying to get back to their original entry. And it's actually pretty clever when you think about it. If, say, for instance, now this is your measured move, maybe this is the actual measured move. Using this high, you can see we have it here. But say, for instance, now this is your measured move. Again, you're probably trying to sell here. Let's actually see. This level probably got some sellers around here. That's probably why you have some profit taker. But anyway, so let's say you did indeed use this as your measured move. Essentially, you sold here or sold somewhere here, got disappointed with this, sold again, and could not make money. Instead, you got to break out. You're going to sell again. Maybe sell here, and your target is somewhere around here, and that's failed. So now you have to sell even higher. All right, so first bar. Actually, before we go into the first bar, we look at the range. We have 2 legs down, actually 3 pushes, 1, 2, 3. It's 2 legs actually, because you have a double top and 2 legs, right? So you go 2 legs up, 1, 2, and it's a low high double top. This is good for the bears because now you're thinking, perfect. So we're probably going to break this low. Well, they got disappointed. Look at so much momentum. I guess a lot of convincing bears thinking we're going a lot lower because we have a lower high double top. Chances are you get a lot more bears selling in, also because it's a second entry short, right? And therefore you're expecting it to go lower. Instead, you get this bull bar over here, which is very disappointing and follow through. So this isn't great. You try to go down and it fails. Second day, look at what's happening. Today we have a bull bar. So we have trapped bears from here who are here. They're probably going to sell this bar. And of course, look at what's happened. These trapped bears have sold here. They're trying to get out, especially those who are down here. So we could always slightly project, maybe sell, I don't know, this high to this low. This price is probably support or somewhere around here. We're getting some, we got a tail here, right? And essentially what that tells you is, let's even look at it from those who sold with stop orders. So let's say you sold below this candle and no, I'm mixing it up. Let's say you sold. I'm going to use those who use stops. You sold below this candle. You're going to have to sell again. You're going to sell again below here. And this is your average price here. So this bar would have gotten you out. The thing is, it's sometimes I never mark these on the chart because it's lots of things are happening. 5 minutes seems it's a very short time, but I'm aware of the fact that we're in a trading range. Every time we get a strong bull bar, you're going to get sellers because you have trapped sellers, especially when you see sideways over here. And this happens on all time frames. You can look at the daily chart, see days like this, you're going to get that sort of thing. But anyway, look at this. So we have bull bar 1, strong close, bar 2, strong close for the bears bar, bad location, moving average. I will not sell that. It's also too early in the day. It is the middle of the range. So chances are you might, I don't know, it's indecision for me. You get some sellers, but look at what happened. They buy, and they actually buy on the moving average. This is the 60 MA, or rather 15-minute moving average. They buy it, and now what you have is a high 2. It's a lower high double top, and therefore a double bottom. Therefore, it's a credible buy. Although it has a tail, but I think for an opening trade, I think it's a good buy given the context. And what I mean by that is, if you look at it, very strong buying, pretty tight channel. You're expecting prices to go higher after 2 legs down, right? So some bulls have bought here because they bought this double bottom, expecting prices to go higher, and they're probably going for a measured move of that range. So they will probably be aiming for here. If we look to the left, we didn't get there, but that's probably the same measured move target of the other one. All right, let's go back into today's session. So anyway, bar 3, if we go above bar 3, it's a credible buy with a stop below bar 3. I think that's a credible buy for a swing. You could probably go for 1 to 2. It triggers. So right now, I am confident that we're going higher because we're getting some strong closes, strong enough closes above the moving average at the open. So I think we have buyers below these bars, particularly buyers below 4, buyers below 1, which has been proven by bar 3. Let's see if we get fall through. We don't get good fall through. Instead, we're getting a micro channel, but it's pretty broad if you think about it, because we're testing these lows, not getting below them, and therefore want to see what's going on. We go sideways. Whenever I see an inside bar, it tells me we're probably in a triangle. We break out above, but we're finding sellers above bar 5, right? So that's 2 legs up, 1 pullback, 2. So it's a micro wedge. I know the bears are going to try and get back down to bar 3's low because they want a lower high double top. Bulls are trying to form a triangle low, so they're going to try a higher high double bottom, higher low, sorry, double bottom. So you're getting this situation already. And look at what's happened. Bears sold below this bar, not a great buy, sorry, not a great sell. Just because of, we're selling moving average, we're closing bars above the moving average. So I'm not convinced to sell yet below the moving average, especially if I'm long here. I don't like the idea of selling here. I think the buyers will step up. And that's the thing. One has to be convinced that the buyers will show up. So what's also happening here is bar A has a relatively good close, almost the top of the triangle, top of the range. We want some follow through, and we do get good follow through. We break out above bar 7. So we're almost convinced we're out of the triangle, but yeah, we still haven't gotten above bar 2. So it still could be a lower high double top. And this bears would like to see this as a second leg trap. So first leg, pull back, second leg, and maybe this is a complex second leg. They're probably going to try and sell this because this is where they sold before. But instead we get a breakout. And it's a nice breakout because it closes way above this, but it closes just at the prior day's high, right? So those who sold here, those who bought here are quite happy, but this is 2 legs up. So we should probably see, do we get any follow through or do we get a pullback? We're getting a pullback, right? So some profit taking. However, this is strong enough, so we'll probably get a second leg. Maybe this is a wedge, 1. Actually, no, it's not a wedge because this has already come down. Maybe it's a wedge as far as this is concerned. So first leg, pull back, second leg. So they're looking for two legs sideways to down, but I reckon they're going higher. All right, so we get some sort of follow through. However, look at what we get: tails below the bar. Therefore, chances are we'll probably find some buyers below bar 12. Not convincing. We don't even go below bar 12. Instead, the bulls buy bar 12's close, and they get a bar that closes just above or just at the bar 12's high. Does not get above bar 11, so still slight triangle. Bulls need follow through. They don't really get follow through. They get a double top. They don't even get above bar 11. However, if you are long, you're seeing some good momentum. Slight body gaps here. And essentially what I mean is we're not, from the last bear bar here, we're closing the gaps, but we're not overlapping the bodies. Still printing some good closes way above the moving average. This is good for the bulls. Suggests that we're still in the bull trend. If you think about it, we are going higher. We now break out above this double top, and we close above the double top. So this is a breakout in itself. So chances are we're going higher. One could probably move their stop from here if they're long here with a stop here, maybe down here, up here, sorry, or maybe even here. At this point, you could probably be close to break even. So going sideways, going up, follow through, tails. The price action. The bars aren't closing. They're not big. They're not closing huge. Maybe because volatility is low. They're not closing on their highs. You're getting small bars with tails. So essentially, we're kind of carrying on from this sort of price action, which kind of suggests that we'll probably get a deep pullback. We're not getting this sort of thing where we're getting really aggressive buying and a nice move up. Instead, we're getting range, pull back into the range, next leg up. And then we now have a sideways bar. So traders are taking profits, essentially just scalping the lows, selling the highs. And this carries on. So we're getting nice strong close here, bar with a tail, pullback, small pullback, bull trend here. So right now, we'll breakout, 1, pullback 2, probably goes sideways here. We have a wedge top, 2 legs down. All right, there we go. So if I should mark this, we have a breakout, 1, 2, 3. Oh no, let's mark it this way. So you have a breakout, pullback, second leg, pullback, third push. So therefore, we're going to get some profit taking. Some limit order bears have sold this price, aiming to get to the moving average. Probably going to try and get back to this triangle here. 1, 2, 3. This is a triangle. And therefore, you should expect a test of the apex, which is around here, and probably the moving average. Oops, wrong chart. We actually go below the test, but we don't go below the triangle. Remember, the stops are here or even here. This is a bear surprise. So this for me tells me that there's sellers above here, but the bulls managed to get this close at the moving average. Now, something that used to happen to me before is I would see this and then sometimes panic. And I realized I did not, and I panicked obviously because I didn't know what was going on. But I realize now that if you're not getting strong closes, chances are you're going to lose momentum, and chances are you're not probably going to start a bear trend. This is a very tight bull channel with sustained buying. This is probably going to be a minor reversal. So I expect price to try and get back to at least this bull bar over here. All right, so see another attempt by the bears to get lower, to get below here, bar 24, and they fail. Instead, the bulls close this bar at the 24 high, and therefore a buy above 25 is a credible buy off the moving average as a failed breakout. So essentially what that means is we had a breakout above the moving average, a pullback to test the moving average, and then going for a second leg. We get that trigger, and look at what happened. As I said, this bar is a magnet because there's some buyers who bought here and they're disappointed. So they're going to put limit orders to sell. And probably some of them bought this bar, probably bought this bar, and they're getting out, essentially just scalping on limit orders. So there are some sellers there. We pull back to the moving average, and guess what? We form another triangle. So essentially, the triangles are decision points. The market is trying to decide, all right, so another area where we're green, do we decide to go higher or do we decide to go lower? Essentially, a trading range. So we try to break out, and we do break out. However, we have a double top here. So I'm just going to mark that. Right now, it's a lower high double top, but a lot of bull bars. So if anything, if we sell below any of these bars, I expect to find some buyers below these prices. Doji, inside bar. And look at what happened. Second pullback. One, pullback, two, pullback. Probably test this to form a wedge. We've broken above the triangle, maybe. And we have. So this is a trigger. Really good buy in the sense that the price went all the way down and then they pushed it all the way up to the top of the bar. So some buyers will see that as momentum. Although the problem you have though is you're buying at the top of the range where you have a lot of tails at the top because there are limit orders above these tails. And you probably have some sellers up here. And we did. And look, we closed below. So it's not really convincing. And we're still getting some selling and probably some profit taking. But because of the momentum, I reckon this will be met with some more buying. This is probably one of the first few bear bars that's actually been convincing as a sell bar. So what I think is happening here is the bears. Remember we said that because we've seen this, the bears see this as a price to sell, and which they're selling again. The bulls see this and they're like, I don't want to buy high anymore. I'm just going to wait till we go lower. Of course, the bulls don't want the price to get down here because then that would change the trend from a bull trend to a trading range. They want a higher low. So they're probably going to buy slightly above this high. We're getting our first close below the moving average of the day. That will probably get bought. And it did. And look at what happened. We pulled all the way above the 35 high. However, there's some limit orders there. Also, there's a closed gap here. So if the gap wasn't closed, this bar closed it. And therefore, we found some sellers. A beautiful sell, bar 36. However, your stop is all the way up there. So not really high probability. Go down here. I think that, actually, this could be the breakout test by the bears of the moving average. But I always think that there are two tests of the moving average. We might still find some sellers above bar 37. And that's exactly what happened here. I haven't actually looked at this chart. So it's not surprising as I'm watching it. I'm seeing everything happening. I do know certain things have happened, but it's just interesting to see how the bars are printing based on the idea that we have after we break, we test it, we go down again and test it, and this would try and start a bear trend. Now, remember I said that the bulls are going to try and form a higher low, so they're going to make sure they don't get past this price. We're getting some really good triggers below, but too many overlaps. That is not good for the bears. If you're getting so many overlapping bars, it means that if the bulls are buying these lows, they're making money, at least the limit order bulls. And when that is happening, so imagine, say, you buy this low here, right? And then you buy it below, you made money here, you made money here. All these lows are magnets for bull limit orders, even though there are no bull bars. But some on another time frame, there are bull bars, maybe on the 3 minute, definitely on the 2 minute. Now have a bull bar over here. This for me tells, and it's an inside bar. This tells me that the bears have started taking profits. They probably know that the price is probably not going to go any lower, or this is definitely not the place to be selling any further because we don't have really convincing selling. So chances are we will start to get some more sideways bars. And then instead we get a big massive breakout that closes above the moving average. It actually tests this bull bar here. So there are some bulls who bought here, very patient enough to wait, and they've gotten out, maybe bought this bull bar because it's a high low double bottom, betting on that. And they're getting out there, so they're making money. This is not good for bears, especially say bears who sold here, because now they're trapped. They need this bar to get back down here, or at least halfway down. So you can imagine, say they would sell this close. They are hoping this would come somewhere there. Let's see what the next bar is. Nope. Instead, because of what we were saying before, bulls are seeing this to go higher. Now, there's something else that's interesting here. We have 3 pushes all the way up here. 1, 2, 3. So you're expecting this to start a bear trend, to come back to the bottom of the wedge, come back here, come back here. But instead, we get this. So some bulls are seeing this as, oh my gosh, this is great momentum. We're still going higher. This is a tight bull channel. So you can imagine something like so. Not really a good one. But anyway, it's a very tight bull channel. Oh, wrong color. Oopsie. Wrong color, but it doesn't matter. It's a tight wedge. And it looks like we're trying to break out above the top of the wedge. And therefore, it's, there is, again, for me, magnet here, the top here, it's also a magnet. This looks like a breakout. The bulls are expecting more buying above this. This was the last bar of the day. And therefore, a good way to close the day. But basically, the reason why I'm doing this is such a long video, but it's just really just to highlight the aspects of how I'm making decisions now as I'm trading. I'm really looking at momentum. And I don't know if that has a lot to do with the fact that nowadays, compared to what we used to have, say, about 3, 4, even 5 years ago, there's a lot more momentum in the bars. So even buying, say, something like bar 8, you're able to make quite a bit of, money from just buying bar 8. There is a lot. Look at what happened with bar 8. You got 1-to-1 just on 3 bars. In the past, when I've been looking at some of the old bars, the old charts, you may have a big bar like this and you may not get all the way up to here before you came all the way back down. The ranges were a lot tight. But now you're getting a lot more momentum. So it's a lot easier sometimes to read the price action in that regard. Anyway, I hope this was useful, and yeah.